Hi, everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter. This is May 11th, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And folks, this is one of the beaches that Jimmy Buffett used to walk on, and it is sunrise, and the ocean looks very, very nice. It's going to be a beautiful, beautiful day. So just get out there and enjoy yourself. But meanwhile, the market, wow, what a week. 8 straight up days for the Dow. And this week, 2 Fed officials speak on Monday about interest rates. And I'll tell you what, they're going to jawbone this market down a little bit because they don't want people to get too complacent that the Fed is going to lower interest rates. So they're going to be hawkish about the market and the overall economy. And this in itself has a way, they call it jawboning, and this is a way they get people to slow down and start thinking about, gee, will I have a job next week? Gee, will I have enough money to go shopping? So if they keep that mentality into the market, then the market works itself down to a more stable economy that we can all handle, and that's what they will be doing on Monday. And maybe we'll get that test of that 50-day moving average that we keep talking about, because we want to see that happen. And then on Wednesday we get the CPI numbers, and they just might come in weaker than expected, folks, or at least not as strong as they did last time, and that will show everybody that the Fed is doing its job and that inflation is gradually getting lower and lower. All this week coming, folks, so it's going to be exciting. And our weekly stock analysis video, well, Texas Roadhouse continues to increase traffic flow 5 quarters in a row, as a matter of fact, while it totally outperforms some of the fast food chains like McDonald's, Yum Brands, Domino's, and Papa John's. In fact, Texas Roadhouse is right behind Chipotle's in the stock price for this year so far, and over 5 years too. Texas Roadhouse is doing very well, folks. And our ETF video, well, we have a couple of new stocks in the Home Builders ETF, and they have tripled the ETF itself over the 5 years. And don't forget, the Home Builders ETF outperforms the S&P 500. That's why we look at the Home Builders, because we want to outperform. Remember, our entire strategy is to outperform the S&P 500, so we might as well look in the ETFs that outperform the S&P 500, because the top stocks in those ETFs will certainly outperform the S&P 500. And the Home Builders ETF continues to outperform the S&P, and we give the reasons why, folks. You're going to be a little bit surprised here. So let's get right into the market, and we can see, yeah, we had this down or decline, this downward move in the market as interest rates started to go up because inflation was not coming down as fast as expected or as fast as hoped it would. And so the interest rates started creeping up a little bit. The market went down, went back up to test this 20-day moving average, and fell down below it for a couple of days, which scared everybody, and then all of a sudden took off. And now we're sitting at the top of this band, or we're sitting at the top band, and maybe it's time for a little rest. But down here, our intermediate term indicator is now pointing up. It's at the 0 mark, so this is looking good down here, folks. But we still want to get that test of the 50-day moving average, and let's go right there. And here we are. This is the S&P 500. Blue line is that 50-day moving average. This green line is the 20-day moving average. And finally, the green line is starting to move up, and we want to see this crossover right here. This is an important point, because that'll be a silver cross, and we are above the 200-day moving average, which is good. So whatever happens up here adds to a strong economy. So maybe Monday, when the Fed or 2 Fed speakers talk to us about interest rates and try to jawbone down the economy or the speed of the economy, we just might get this little test of the 50-day moving average. And once we get a test of that, and if it's successful, boy, we're going to have a good summer, folks. And then, of course, down here, we just showed this intermediate term indicator. The only thing that worries us a little bit is you see the volume here and the vertical lines, the vertical gray lines, represent the volume on the up days, and the red lines represent the volume when the market closes down for the day. And we can see the volume drying up. So that's why maybe Monday, with the two Fed chiefs speaking and trying to jawbone the market, and we know we want this test of the 50-day moving average and the volume drying up. So maybe, and this is what you hear on TV, the market participants are getting complacent. Well, that's nice. It's a nice place to be. So anyway, we want to see this test in here. And up here, you could see that we are overbought. So maybe it's time, and we'll see. But things are looking good overall by this indicator all the way down here. The Dow, same thing. We have the exact same situation here, but the Dow does look stronger, doesn't it, on this 50-day moving average and going straight up. So we see the volume drying up, but not as much as on the S&P 500. So the Dow is looking pretty good in here, and we are right at that zero line with our crossover intermediate term indicator. Let's look at the QQQs. Same thing, folks. Same thing. We're over the 50-day moving average. We would really like to see a test of this 50-day moving average. We want to see this 20-day moving average continue up and cross over, and that'll make us feel a lot better and do away with that old saying, sell in May and go away, or something like that. But folks, we have to see what happens this summer. We think we're going to have a rally during the summer, or a nice calm market where nobody has to worry about anything. So that's what we're hoping for. And when we portfolio protection, this May 17 put, this is for about $135,000, $140,000 portfolio. We have these protective puts in about 12% below the market, and we will be rolling over this May 17th because it expires this coming Friday, and we will roll out to August. And we'll see where the market is at that time, whether it's the SPY 425 put for August. We'll just have to see what the market gives us this week. On any rally, we will probably roll over this put into August. So, folks, we had a very, very good week this week. The market is overbought, so it's going to slow down a little bit, and people are just thinking that, gee, we went too far too fast. We do want to see a test of that 50-day moving average, but we are looking at some good indicators pointing in the upward direction. Nice calm day, nice calm morning here. Go out on this beach, enjoy yourself, go for a walk, be with your family and your loved ones this weekend, have dinner with them. Forget about the market, because guess what, folks? The market will be open back here on Monday, and we will be right here alongside with you. Go out, stay safe. We'll see you next time.